Can I really figure out all the hidden risks of subprime lending before it's too late? Subprime lending is a type of loan offered to people who don't qualify for traditional loans, often due to poor credit history. It's like a second chance at getting a loan, but with higher interest rates. This type of lending exists because it provides an opportunity for people to access credit when they might not otherwise. However, while it seems like a solution for some, it carries significant hidden risks that can be devastating. The central problem with subprime lending is that it often targets vulnerable individuals who are desperate for financial help. These lenders might appear to offer a lifeline, but they can trap borrowers in a cycle of debt that's hard to escape. The hidden risks aren't always obvious at first glance, and that's what makes them so dangerous. Many people don't realize the full extent of these risks until it's too late. One of the specific hidden risks of subprime lending is predatory lending practices. Some lenders use deceptive tactics to take advantage of borrowers, charging exorbitant fees and interest rates. These rates can be much higher than those of traditional loans, making it even harder for borrowers to pay back the loan. Inflated interest rates and fees can add up quickly, causing borrowers to struggle with debt. Another risk is the potential for asset forfeiture. For example, if you take out a loan to buy a house or a car, you could lose that asset if you can't make the payments. This can be devastating, especially if the asset is essential to your daily life. A subprime loan can also have a negative impact on your credit score, making it even harder to borrow money in the future. When you can't pay back a subprime loan, your credit score takes a hit. This can make it difficult to get approved for future loans or credit cards, which can limit your financial options. The combination of these risks can lead to a catastrophic financial outcome. For instance, imagine taking out a subprime loan to cover emergency expenses, only to find yourself struggling with high interest rates and fees. Let's consider a hypothetical scenario. Imagine someone who takes out a subprime loan to cover emergency expenses, only to find themselves struggling with high interest rates and fees. They might miss payments, which could lead to asset forfeiture and a damaged credit score. Before they know it, they're trapped in a cycle of debt that's hard to escape. This is the reality of subprime lending for many people. In summary, the key hidden risks of subprime lending include predatory lending practices, inflated interest rates and fees, asset forfeiture, and negative impacts on credit scores. Understanding these risks is crucial to making informed financial decisions. Subprime lending should be approached with extreme caution and awareness. If you've had an experience with subprime lending, share your story in the comments below. We'd love to hear about it. Also, consider subscribing to our channel for more videos on financial literacy and consumer protection. We'll help you navigate the complex world of finance and avoid common pitfalls.